Hey, what's going on, traders? I hope you guys are doing well today. This is Chris at Verillo Trading. I want you to meet my friend Diego, who's an awesome guitar player from Costa Rica. He's a sloth. All right. So in this video, it's a compilation from two different live streams that I did this week that just passed in December. And I had this idea to kind of put together a little compilation for you. So you're going to see a few different clips from those two live streams. And there's a couple of really good questions that viewers asked me. And at the very end of it, there's also going to be some important statistics that scalping traders might want to be aware of. So guys, I hope you enjoyed this video, and I hope you're excited for a few more awesome videos that I've got planned for you guys coming up. And happy holidays, and I'll catch you soon. Take care. And the last thing is, I just want to remind you guys to eat well, because I think my green screen is changing the color of my salad. Don't worry, it's green salad, okay? Okay, enjoy the video, bye. I gotta be honest with you, dude. Those Wednesday night jams are killing my schedule. I pretty much just decided I just stopped doing it, you know? Like maybe once a month is okay, but it killed my schedule. Let me try to explain to you why. Because, you know, if you look it up, I mean, it takes on average 2 to 3 days to get adjusted to a sleep schedule. So think of it like this. Let's say I rest well on Sunday, okay? I wake up Monday morning, maybe I'm a bit groggy, so I'm not like 100% used to the sleep schedule. Let's say I wake up at whatever, 7 o'clock or earlier on Monday. Tuesday, same thing, wake up early. Maybe I'm more in the groove Tuesday. Wednesday, same thing. Then Wednesday night, I party until whatever, or we do those jams and I get home at midnight and something, and you're around a lot of people and it's just very hectic and so much stuff at once. And then I feel tired the next day, and there's no way around this. Like, I've tried to, you know, get around it and say, you know, I feel okay, whatever, I can trade. But from statistics, over months and months worth of doing this, over doing Wednesday night jams. In case anybody who's wondering, we host like this Wednesday night jam anyways, and I'm the guitar player in the band. It's very hectic, there's a lot that goes on, we play and everything, and I get home and it's 12 o'clock, maybe 1 in the morning, and the next day I never trade well. And I've realized this over months, if not years worth of occurrences. And I try to be, you know, I try to not be biased and say, okay, just because I had a gig the previous night, I'm going to be tired today. I don't think like that. I literally show up and I say, how do I feel today, right now? And normally I feel less focused. That's number one. And normally I end up taking the next day off of trading, right? Because I realize that I don't feel well, or I'm just tired or whatever. And that fucks up my sleep schedule for the next day, Friday or whatever, Thursday, and then Friday. And then it's the weekend. And then on the weekend, whatever, I'll slack, I'll go to bed, whatever. I'll hang out with my friend, play Battlefield till 1 in the morning. I don't care, right? Because with the weekend, I can work on videos and do other stuff. So I'll slack my sleep schedule then. And then it takes me another 2 days to get it back. And by the time I get it back, it's Monday or Tuesday. And then if I do the Wednesday jam again, then I fuck my sleep schedule again. So basically I end up in this non-stop rotation of never getting used to my waking up at 7 o'clock in the morning or earlier to trade the bonds, you know? So it just fucks with me and I just can't do it anymore. That's it. Because, you know, I've been that guy before. I've been the guy that every time you look at the chart, it's going up, and then you see the market start to tick down and then you short it. But that's the wrong approach in an uptrend, because what happens is the market will go down, the bids will pull away, and that will attract traders to sell it, and then it'll snap back in their face. That's how an uptrend works. So traders get convinced into selling low, and then the market participants bid it back up and take out their buy stops. But when the market is going up and up and up, it also it conduces traders to chase it on the upside. So sometimes they can get caught on the upper extreme, and that's where you would want to sell it. But again, landing those entries is very tricky, because normally the only time you get filled is if you have the order waiting right there. And once it goes away from that, once it trades and goes away, you're not going to get filled on a backtick. Normally, if you get filled on a backtick, you're going to be offside on the trade. How do you see icebergs versus normal orders in the S&P 500? So for example, let's say there's 1,000 on the bid. It trades 1,000, then it trades 500 more, and then another 300. That means that there was more size at the price than was being displayed. That's an iceberg. I see that on the bonds all day long. I saw it today. I used it as a trade signal today. But it has to be accompanied by some context, right? Just because you see a 100 on the bid and then it trades 1,000, that's not a signal to trade. All that means is that there was a hidden order there. That's why you need a bit of more context. Come through and shake things up. We had the Federal Reserve yesterday, and they told us that they were keeping interest rates the same, and there was some pretty decent volatility as well going into this morning as well. Guys, if you're on the stream right now, remember to hit the like button. It helps a lot with the YouTube channel. Just press it, you know what I mean? You can press the dislike button too, but the problem with that is no one's gonna be able to see you disliked it because they removed it. And I honestly don't agree with that, but fine. Well, believe it or not, the dislike does have an effect. When you hit the dislike button, the platform will stop recommending you that content because you're basically telling YouTube, I do not like this content. So YouTube is not gonna show you more of the content that you don't like, logically. Unless, however, there's a certain algorithm that's designed to show you certain things that it wants to show you. And let's not mention what those things are. So, I'm always looking for ways to improve the stream. So if you guys have any suggestions about what I could do to improve my live stream, make it more entertaining. I don't know if I want to make it more entertaining, but make it more, I guess, more of what it already is, which is just basically me talking about the markets and answering questions. At the end of the day, we're trying to get better every day, aren't we? Or we're trying to get less bad too. So there's not really much going on. I don't really like this movement, I'll be honest with you. This is kind of just slow, choppy, starting to grind its way down type of movement, and it doesn't feel very opportunistic. So that's the current range that we're in on AMC right now. We came up, tested resistance, sold off, the sellers took it another time. So for me, we're in the middle of a range, and generally speaking, you're bear biased at this point. If it gets back above $25, give or take, you can keep a long bias. That's how I would trade it. Because above $25, you're gonna start to see some sellers give up a bit, and you might get a little bit of a squeeze past these highs. That would be sort of the play that I could foresee there. But right now, where it's trading, you're in a 2-day high volume area, so it'll probably just end up consolidating here for the rest of the session. At least that's what we can determine here, since there's about an hour and a half left. Just play Dark Souls, see how many times you can die, then beat the whole game. That's kind of how the stock market works. I like that analogy. I like Dark Souls too. It's quite a hard game. I also believe that 10,000 hours thing is pretty subjective. Like you can spend 10,000 hours doing the wrong thing and not know it. So in that scenario, you'd be counterproductive. What's the minimum once you start with the trade? You need to understand how you're going to trade first. You need to understand the risk you're taking per trade and why you're taking that amount of risk per trade. Basically, you need a trading strategy, a risk management strategy. And then that's how you determine what your account balance has to be. You do not determine the minimum balance by using day trade margins. That's a common mistake. 870. This looks like the type of scenario where it's going to go past the 15-minute high, but we'll see. So there, it's still going. It's still going. You'd be chasing it if you'd buy it here. And what we just saw is the market go straight for the 15-minute high. That's crazy. Look at this. 886. We're not there yet, but we basically came 2 points away from it. So now 880 on the NASDAQ. You could say 6.5 point ranges. 74, 73 and a half. You'd be looking at about 73 and a half, 2, 1.5, evens and a half bid. I'm a bit of a suicide mission. I got filled. How did I get filled? Look at this. I'm gonna get stopped. If they don't stop me, I'm gonna laugh. How did I get filled? That's so funny. Put a limit order right at 886. My stop trail, auto trail. Oh well. It was a 6-point profit. I forgot to adjust the auto trail. It didn't go for the 15-minute high. It chopped back, so that's not very reliable. These markets suck because they give you heart palpitations. That's why I moved to the treasuries. That was a good trade. I read the volatility range right. I placed the order there. I got filled. I mean, you can rewind it if you want, and you'll see that that trade didn't even go offside. That's the way NQ is. Either you get it or you don't. And because when you don't get it, normally you don't have enough time to get out. And when you do get it, normally you really get it. And as you guys can hear, I like discussing and talking about things. To kind of blow off steam, right? Blow off steam. Because like I told you, when you trade these markets, they're very emotional. It has the potential to really tilt traders, okay? If you're a human, you can easily get tilted trading these markets. So just be aware of that. Take deep breaths and just go get some water. I'll be back. I'm gonna go get some water. Mohammed, you asked a really good question. Is trading changing your character? This is a great question because yes, it is. It has, in fact. I believe that a lot of what you learn in trading is like really, you in a way you need to learn things that are not that you don't learn anywhere else. Kind of like no other job requires you to, you know, be actively aware about your emotional triggers in real time. You know, trading does. So definitely trading requires you to be more emotionally aware and learn how to resolve emotions in real time. I'm quoting Jared Tendler. I'm paraphrasing everything Jared Tendler says, but the reason I'm doing that is because it's helped me, and I'm saying that to you guys. It's helped me a lot. And I think about this sometimes, right? Because I come from a background of music, and in music, when you're a musical composer or artist or songwriter, as we're watching the market sell off here, in a way, your accumulated emotions actually help you, because they help you to kind of write better, maybe. But that's a debatable topic, right? You know, like maybe they don't. Like, look, think of Johann Sebastian Bach. Okay, the guy wrote thousands of fugue, which is counterpoint, where they have multiple voices and they're interacting with one another. This is a very mathematical or methodical way of composing music. Now, if we fast forward a few years and go to something like Richard Wagner, who wrote like these very emotional and like epic operas, and you can tell that there was like fire in him when he was writing these things, that's different, you know? I don't think Richard Wagner would have been a good trader because the guy was like on fire with emotions probably, okay? And he probably didn't know how to resolve them other than by writing music. So kind of an interesting topic there. So yes, I believe that learning trading has the potential to teach you things that you would not learn anywhere else in any other job. That's why most people don't succeed, because they can't do that. They're not good at saying, you know what, I'm fearful right now. I have a fear of making a mistake. How do I resolve this? You know, I know that I have to approach trading from a year-end perspective. You know, so the trade I make today or tomorrow, even for that matter, it has a very small effect on my year-end result. So if you focus on the process and think of trading from a year-end perspective, all of a sudden it starts to take away some of these fears you might have of making a mistake in the short term. This looks like a Texas hedge type of scenario here, guys. It looks like you're long or you're not. You know what I mean? And also, if you really want to support the channel, go ahead in the description and click on the Interactive Brokers link. That also supports the channel more than you think. All you got to do is click on it from a unique IP address. It's either going to be a Texas hedge scenario or it's going to be fade back into where we just were scenario. But the read is there. The read is there. So we just printed 11 contracts, 775, 2,000 contracts at 2 printed just now, 1,000 contracts here at 8. And let's see what's going on here. We're bid them at 8 now, 300 contracts. So will they take that bid? The 10-year is ticking down, 1,000 contracts on the bid at 8 on the 5-year. And they bid it back at 2.5. Will they take this bid? And they're taking it. They offer it over. Now they're 200 contracts. And they bid another 3,000. It's going to close right here. That's what I can tell just by seeing that kind of action. Nothing's going to happen. Ain't no Texas hedge here. It's a lot of this like kind of trap action. You know, they move it up 3-4 points, come back down, move it down 2 points, back up 5, come back down 3-4 points, back up 7, you know. It's called trap action. You gotta kind of get used to watching that. Overshoot, and it flushes right through it. Would you bid 25.5 here? Maybe if you were on a suicide mission. You're not gonna get it anyways. That's NQ for you, so it's okay. I was playing Battlefield with my buddy the other time, and we were just fucking around, driving one of those trucks, I guess, in the game. And I was like, yo, let's go on a suicide mission. And then as soon as I said that, we died. Because you tripped over a mine or something. It's stupid. Have you ever thought of building an algo? Yes. In fact, I have, yes. Because I believe that right now, I'm currently able to explain my strategy in a way that is almost quantifiable. But it would really take a professional to be able to execute it, you know, because this is why algo traders struggle, because, you know, there's certain discretionary things that you can't write into a code. You know, that's why it's so hard to be an algo trader. Correlations, or the certain things about the way the market's trading when it's approaching an order. I don't know how you would code that into a strategy, you know, like you can't tell a computer to know like what kind of movement you expect to see before the order trades. You know what I mean? So like there's certain little discretionary aspects, I believe, that are really hard to quantify. You know, it's not as simple as, you know, okay, the market's trading here, place the order there. No, it's not as simple as that. It's if the market is trading here and then it does this, then it's still good. But then if it does this and this, then you have to pull the order away. You know what I mean? So like certain things like that, I have no idea how I would quantify them. I would really need a professional to help me code that. Yeah, it's pretty much garbage. 61 hour at 53. Nah. It's kind of junky price action. That's what I'd call it. It's like very manipulated. They do whatever they want. It's very junky. It doesn't have any sort of... There's certain patterns that are very easy to see. And the only reason I know that is because I've seen them. Because I've traded long enough to see when the market is pretty good to trade. But when you see this kind of stuff, it's not your game to play, guys. It's not your game. This is like options related stuff. It's just not. But this looks like the type of action where like algo traders are getting wrecked by other algo traders that have a lot more money, that are able to like hedge themselves and do all the kind of crazy technical stuff that they need to do, you know? So, you know, if you're a run-of-the-mill algo trader, I still think in this environment you're gonna get absolutely shithoused, because this is just junky action. I've seen better action. That's what I'm trying to say. Like imagine you're like up against the hardest boss in Dark Souls, and like it's like on the difficulty level that's like not even in the game. Because by the way, there's no difficulty level in Dark Souls, but if there was like a difficulty level that you had to unlock, that's kind of what the last 30 minutes of trading normally are. Normally 900 guys. There's an iceberg at 900. We flush 15 points higher and then 10 more points down. Now that's what you call a seesaw. Look at this shit, huh? 8-point ranges? I don't know. We just went up 15 points and came down 10. I don't trust my indicator. This is some Goldman action. Goldman, you do whatever you want. The only way you're going to make money trading this, you got to get Goldman on the phone, and they're going to tell you when they're buying it and when they're selling it. And Q has no idea what it's doing. Clearly it doesn't. I'm watching it. I'm narrating it as well. I'm clearly seeing that as well. You know, I'm not going to go against what I'm saying. I clearly do not have a good read right now. So I'm not going to go against it. You know what I'm saying? Until I see something that I recognize, there ain't going to be happening no trades. Nothing going to happen here. I made a comment to you once or something, and you're like, I made a comment about the bond market, and then you just like said, I'd rather fall asleep. But believe it or not, dude, there's some good action there. Yeah, but okay, now what I wanted to demonstrate to you was this right here. Take a look. Take a look, my friend. We're gonna go over here and look at the trades. Okay, so now I'm gonna bring up first. I'm gonna bring up micro Nasdaq. Okay, these are a few trades from the micro Nasdaq. 8 trades. Okay, let's go to the statistics. The average trade profit or loss for these 8 trades that I took, including the one I took this afternoon, is 2 ticks. 2 ticks, okay? And that's after commissions. That's after commissions, okay? Now let me remove the commission from this. Now my average trade per profit is almost 4 ticks. 4 ticks. That means that my expectancy as a trader changed by whatever your round turn commission is. If it's in this case, it's 80 something cents round turn, okay, for my commission on the micros. It's affected by 80%. My profitability as a trader is affected by my commission by 80% if I'm profitable by 2 ticks in this case, okay? Now, let's go over to the treasuries and I'll show you a similar example. Look. And in this example, look, you can see the win rate was 62.5%, okay, whatever. Let's go to the treasuries, the 5-year treasury, okay? And you can see, now look at this. Look at this right here. Out of 35 trades, the win rate is 34%, guys. That means I only made money 34% of the time, and this is not accounting for how many of those were scratch trades or whatever, but I only made money 34% of the time on 35 trades. So that is not really a good win rate, okay? However, I still made money at the end of that after commissions, up $93. Now, go and take a look at this. Average trade profit and loss without commissions on those 35 trades is $4.91. The tick value, 1 tick in the 5-year treasury is $7.80. So after 35 trades, my average profit is a little bit less than 1 tick in the market. It's less than 1 tick. My average profit, I'll repeat that, my average profit over 35 trades is less than 1 tick, okay? Now when I add the commission, I still made money. It only affected my profitability by maybe about, I don't know, 40%. Let's see, 260 to 490. Okay, maybe about 50%. Okay, so in this scenario, the commission affected my profitability by 50%. And that's because my average profit per trade is not even 1 tick. Obviously, the higher your average profit or loss is per trade, the less of the impact the commission has on you. However, what you got to understand in all of this is that on average, traders are not killing it all the time, okay? On average, traders, most of the months of the year, most days of the year, and I don't even know who I'm talking to because there's nobody typing in the chat, but I'm just saying this. On average, traders are break even or close to break even most months of the year. Because after you take away holidays and the slow days and slow periods of the market, there's only about 9 months in the trading year, okay? And out of those 9 months, maybe about 3 or 4 of them actually have good trading price action that you can actually make good money in. That means that more than half of the time, you're just grinding slowly. You're either small win, break even, small loss, break even, small win, break even. And your job as a trader, as a day trader, is to effectively keep that going until you get one of those days where you just kill it, and then all of a sudden your equity curve goes from slowly going higher, slowly flat, slightly down, slightly up, and then you have one day and then boom, it shoots up because you had a good day, because you waited for the day, okay? So what I'm trying to say is that the majority of days, day traders, and other experienced traders will tell you the same damn shit, okay? I'm not just one jackass telling you this. Other traders are going to tell you the same thing. Most days you're chopping around. So if most days you're chopping around, and you can see in this scenario, my average profit over 35 trades is less than 1 tick on the 5-year treasuries, and I still made money because the tick value is much higher than my commission round turn. That's the end of the story. That's why when you trade micros, and I'll show you another example with the micros now, we'll go over to MNQZ, which was the previous contract. This contract I traded 192 trades, okay? I didn't make money on it in case you were wondering, but I just want to show you how much the profitability was impacted by commissions. Take a look. So after 192 flat to flat trades, the win percentage was 36%, which is not high. That means I only made money 37% of the time. But also remember what I just showed you on the 10-year, on the 5-year, is that also the win rate was around 30-something% as well, but I still made money, okay? So here's where the difference comes in. So 192 trades. Now look at this number, average trade profit or loss. Without commissions, it is 79 cents. So it's roughly 2 ticks in the market. It's less than 2 ticks in the market, okay? So on average, over 192 trades, I was not profitable. Now, whether I was profitable or not profitable is irrelevant, but what is important is how close I am to the break-even marker, which is 0 in this case. So I'm within two ticks of break-even, okay? Now, when I apply my round turn commission, all of a sudden my expectancy went from minus 79 per trade to minus $1.63 per trade. So that's basically like a 100% impact on the expectancy due to the fact that the round turn commission is so high compared to the tick value of the market, which is the micros, 50 cents per tick. Okay, so this right here is just extra proof that any of you guys need, that if you're a break-even trader in the micros and you're a scalping type of trader that does a lot of round turns, you're really playing a hard game by trading the micros. So when I'm trading the micros, I incorporate this into my strategy. The difference between taking a 2-tick scratch and a 4-tick scratch is basically the difference between me being a break-even and a profitable trader. Okay, so it's about repeating that over and over and over and over again. Okay, every time you take a 2-tick scratch instead of a 4-tick scratch, you're that much closer to being a break-even trader versus a profitable trader. There's a high percentage of trades as a scalper that you're either scratching for a small loss or a small win or a tiny loss. And then you get those small percentage of trades that just run and you let them ride. And that's why, you know, if you are trading these markets, you need to understand how important, the importance of let ride. When you have a winner, you cannot have a limit order, you know, 6 points away or whatever. Sometimes you could, depends on the condition, right? But on average, you need to be letting them ride for what they're worth. So if it's going in your favor 10, 20 points, you just trail a stop. I'm a big fan of trailing, you know, a stop away from what the volatility is and all that stuff. So that's it, you know. Just wanted to share that with you guys, and hopefully it helped you, made you realize a few things. And that's all.